There's something I've been thinking about lately, actually a lot lately. Artificial intelligence isn't just changing the companies I'm watching, it's starting to change how I'm thinking about investing. And that's actually a pretty big deal. Because for years, when I looked at a stock, I would think about things like revenue, growth, earnings, depth, margin, competition, management, valuation, and the overall market. And obviously, I still care about those things, but AI is adding another layer of analysis. And honestly, I think investors who completely ignore that layer could eventually find themselves looking at companies very differently from the market. So today, I wanted to explain exactly what I mean when I say that I am changing how I invest because of AI. I'm not saying I'm throwing out everything I've learned. I'm not saying I'm going all in on AI stocks. I'm definitely not saying every company with an AI strategy is automatically a good investment. What I'm saying is that AI is changing the way I evaluate businesses, and there are a few specific things I'm paying much more attention to now. The first change is probably the biggest one. I'm becoming much more interested in what a company's business could look like 3 to 5 years down the road, rather than just what it looks like today. That's always been important. But AI could dramatically change the economics of certain businesses. Think about a company that has thousands of employees doing repetitive tasks. If AI can simply automate some of those tasks, the company's revenue might not necessarily explode, but its margins could potentially improve, and that's important. Because sometimes the biggest impact AI has on a company isn't generating another $1 billion in revenue. It could be reducing the cost of generating the revenue the company already has. That's the completely different way of thinking about AI. So now when I look at a company, I'm asking, what happens to this business if AI becomes dramatically more capable over the next 5 years? Does this help the company? Does it hurt the company? Does it barely matter? That's becoming a bigger picture. It's a bigger part of my analysis as well. The second thing I'm watching is operating leverage. This is where AI gets really interesting. Imagine you have a software company that can serve 100,000 customers with a certain number of employees. Now imagine that same AI allowing that company to serve 200,000 customers without doubling its workforce. That potential is very powerful economically and economically changes things. Revenue can grow faster than expenses. When that happens, margins can expand. That's something I think investors need to watch closely because the impact of AI might not always show up immediately in revenue. It could show up in lowering operating costs, higher productivity, faster development, better customer service, and higher margins. So I'm paying much more attention to companies that have the potential to use AI to become more efficient at scale. Here is another big change. I'm becoming more and more less interested in simply finding companies that are called AI companies. Instead, I'm looking for companies that can change and that can use AI to its advantage. There's a difference. Nvidia is obviously deeply connected to AI infrastructure. Palantir is heavily involved in AI-powered software data analytics. But then you have companies like Meta. Meta Meta doesn't need to become an AI company in the traditional sense. It can use AI to improve advertising, recommendations, content creation, engagement, and potentially the overall economics of its existing business. That is incredibly interesting. The same concept applies to companies like Microsoft and Google. They already have enormous businesses. They already have customers. They already have distribution. If AI makes businesses more valuable, more efficient, they don't necessarily need to build an entire new company. They can integrate AI into what they already have. So I'm asking a new question. How does AI improve this company's existing competitive advantage? I think that often more important than simply asking whether the company has an AI product. Another thing I've started to think about differently is data. Data has always been valuable, but AI potentially makes large amounts of highly quality data. Their data is clean, even more importantly. If a company has years of potential customer information, transactional data, business processes, industry specific information, that could become a significant asset. And I'm not saying every company with a lot of data is automatically valuable. That obviously is not true. But I'm increasingly asking, what information does this company have that competitors can't easily replicate? Because if AI becomes more powerful, proprietary data becomes a bigger advantage. And that's something I think investors are going to be talking about much more over the next several years. This is one more little complicated issue, this issue. I'm also thinking differently about employees, thinking about their workforce. For years, investors would look at a company's workforce primarily as an expense, but obviously employees are also an asset. But AI creates an interesting possibility. A company might be able to produce more with the same number of employees, or potentially produce the same amount with fewer employees. And that could be a major impact on margin, but there's also one side to it. Companies don't adapt could potentially become less competitive. If a company uses AI to dramatically increase productivity while another company doesn't, that difference could eventually show up in the financial results. So I'm looking at what management is doing differently. Are they experimenting with AI? Is management embracing AI? Are they integrating into the AI into their workforce? Are they investing into it intelligently? Or are they simply putting AI into investors' presentations because that's what the market wants to hear? That's the big difference. And this leads me to another change. I'm listening much more carefully when companies talk about AI because when I hear the word AI everywhere, AI powered, AI driven, AI enabled, AI transformation, a strategy, a platform, eventually every company is probably going to have some kind of AI story, but that doesn't mean every company is benefiting financially from AI. So trying to separate the AI story from the economics, it's complicated there, and that's extremely important. I want to know how much companies are spending. What are they getting in return for AI? Is the revenue increasing? Are the margins increasing? Are customers actually trying the product? Is the productivity increasing? And can management measure those results? Because eventually investors are going to stop rewarding companies that simply are talking about AI. And They want results. And then also, just because we have less employees maybe with AI, are they training the future employees on AI? You know, are we only hiring senior engineers and then no developers down the road even know what AI is about? And is there going to be a bottleneck down the road for that knowledge? I mean, companies can't solely rely on AI to do all the heavy lifting. There has to be a balance. So the valuation matters even more here. Now here's where I think things really get important. AI has made me more conscious about valuation, not less. It's tempting to look at companies with enormous AI potential and say, well, if AI becomes as big as everyone thinks it will, is this stock going to go much higher? Maybe. But the market really knows AI is important already. You can see it. The question is, how much of that future growth already reflects the stock price? That's where things get difficult. You have an incredible company with incredible technology and still pay too much for it. You can have that happen. That's why I don't want to invest my investing strategy just buy AI stocks with no thesis, just blindly buy AI. I want it to find companies where the potential AI driven improvement in the business is greater than what the current valuation becomes and it appears to assume. That's a much harder task, but I think it's also a better investment approach. One major change that I'm thinking about when investing in AI stocks, I'm thinking about AI is as a competitive battle. There are going to be winners, but there's also going to be losers, like everything in life. I think investors sometimes focus too much on the winners. Everybody wants to find the next Nvidia, and that's kind of when you can get burned and thinking like this low price stock is going to be the next Nvidia and does the opposite. So you got to be careful there. But what if the bigger opportunity is identify companies whose business are going to be disrupted? Imagine a company whose competitive advantage is based on something AI can replace cheaply. That's potentially a serious problem. So when I'm looking at a company now, I'm asking two questions. How can AI help this company? I'm also asking, how can AI hurt this company? That's a second question that is just as important. I think the second question, how can AI hurt this company, almost way more important than how a company AI can help a company. This is probably one of the biggest things I'm thinking about. I'm taking away from all this. I'm looking at multiple ways to win with AI. I like a company that have multiple ways to succeed. If a company can grow its existing business, plus increase margins through AI, develop new AI products, and potentially expand into those markets, that's a win-win. Now, that's much more interesting to me than a company whose entire thesis depends on one AI product, just going ham on AI. That there's diversification of the business model, I think that's something investors should pay attention to. The more ways the company can benefit from AI without requiring everything to go perfectly, the more interesting the opportunity becomes for me. And it should be interesting for you. You got to look out for those opportunities. And finally, AI is making me think hard, even more long term. There's been plenty of lessons that I've learned down the road about AI and just thinking every AI stock can turn into the next video. That's not always the case. Sometimes the winners are already there that you're already working with. Case in point, Palantir. So there's going to be a tremendous amount of noise around AI. Every week there's going to be a new model that you got to have, a new company, a new chip, a new announcement, a new partnership, a new breakthrough, and stocks are going to react. Sometimes when you focus only on one AI company, that's the only thing you're looking at, like for example, Anthropic, and you don't look at the other engines out there that could help companies as well, and just blindly focusing on that, you're going to miss a lot of those opportunities as well. Everybody thinks AI, ChatGPT, Anthropic, Claude, they look at those two mainly as the winners here in the chat space. And of course, you got others: Nvidia, Palantir, Microsoft, Google. You got all the list kind of goes on, but not so much on. There's a lot of losers in AI. So, of course, what I said before: new company, new chip, new announcement, new model, new partnership, new AI breakthrough, and like the wheel goes round and round, stocks react. So some of them are dramatic, but I'm trying to remind myself that investing isn't about predicting what happens next Tuesday. It's finding businesses that could potentially be significantly more valuable over the next years. That's why I'm much more interested in the underlying economics. Who has customers? Who has the data? Who has the distribution? Who has the infrastructure? Who has the pricing power? And who can turn AI into actual profits? And who's simply spending money because they want, the greatest thing, but they don't want to be left behind. Those are very different companies. They're just spending money so they don't get left behind, but they don't know how to use AI. That's the crux there. So what does this actually change for me? So if I had to summarize how AI is changing the way I invest, I would put it this way. I'm not throwing every traditional fundamental analysis at AI. I'm adding an AI layer to it. When I look at a company, I want to understand its current business, but I also want to understand what AI could do to that business. Can AI increase revenue? Can it reduce expenses? Can it expand margins? Can it create a new product? Can it strengthen the company's competitive advantage? Can it make the company obsolete? They're going to be winners and losers, like I said. And perhaps most importantly, is the current stock price already assuming all of this? Because that's where investors should look at, and that's what where investing gets interesting. So my AI framework. So here's my framework I'm thinking about going forward. First, don't buy a stock just because it's an AI stock. Second, understand how the company actually makes money from AI. Third, look for measurable financial results. Fourth, think about how AI could affect margins and productivity, not just revenue. Fifth, look for proprietary advantages, data, customers, distribution, infrastructure, and or technology. Six, think about both the upside and the distribution risk. And finally, don't forget valuation. Because even the greatest technology in the world doesn't actually make stock and the stock itself investing a good investment. So my final thoughts, And that's really where I'm at now. AI isn't changing my belief in that fundamental investing matters. It's changing where fundamentals I'm paying attention to, which fundamentals I'm looking at. I'm watching productivity. I'm watching margins. I'm watching capital spending. I'm watching customer adoption. I'm watching the management teams and looking at management specifically what they're doing. I'm watching proprietary data. I'm watching valuations. And most importantly, I'm on those calls. I'm listening to those calls. You know, once they hit that earnings, report, you got to make sure you listen to the call from start to finish. You know, I'm watching those evaluations because I think we're entering a period where AI could create some of the biggest winners that we've seen in the stock market. I think we're in the beginning phases, but I also think there's going to be some major disappointments. I've seen those through my investing. No, not everything's a winner, and that's what makes this so interesting. I don't want to simply ask, what AI stock should I buy? I want to ask which businesses are positioned to become more valuable because of AI and paying attention to the reasonable price. Look at the price action and look at that opportunity. Is the price reasonable? Is it a value? That's a much more interesting question. And honestly, that's probably how I'm going to be looking at the market from here on out. AI isn't just another sector for me. It's something that I'm looking at through a lens, which I'm evaluating every company, because whether a company is an AI company or not, AI is probably going to affect its business somehow. And as an investor, I want to understand this. That's it for today in this episode of the Stocklikes Pod. I hope you guys enjoyed it. If you enjoyed this conversation, make sure you subscribe to the channel, follow this podcast, and I'd love to know what you think of our first podcast officially. And we're gonna have more to come. Has AI changed the way you invest? Are you buying AI stocks or are you avoiding them? Or are you looking for companies that benefit from AI without actually being labeled an AI stock? That's the conversation I'm going to keep going forward. And of course, thank you for listening to the Stocklikes podcast. And this is only my opinion. This is not financial advice. If you're looking for financial advice, you know, go to those, go seek to a professional financial advisor. I always recommending that. And as always, thanks for listening. And I'll see you guys on the next one.